Is the Melbourne property market undervalued in 2025? Is the Melbourne property market about to boom again? After years of sluggish performance, Melbourne is now being labelled as one of the most undervalued capital cities in Australia. But is that really the case? In this video, we're unpacking why prices dropped, what's changing in 2025, and whether now is the right time to invest before the market rebounds. Stick with me as I give you a step-by-step roadmap to answer all of this in just 5 steps. Step 1. What's going on in Melbourne's property market in 2025? Step 2. Why is Melbourne undervalued right now? Step 3. What are the best opportunities in 2025? Step 4. Unique considerations in Victoria. Step 5. Where not to buy in Victoria right now. Hey, I'm Lloyd Edge, property investor and author of Positively Geared. I help Australians cut through the noise, understand the property markets and build portfolios that support financial freedom. Let's walk through exactly what's happening in Melbourne right now so you can make informed decisions with confidence. Let's get into it. Step 1. What's going on in Melbourne's property market in 2025? Melbourne property values have dropped by around 10% since January 2024. That's a big fall for a capital city, but there's a story behind it. Policy backlash. Investors pulled out after land tax hikes and the removal of stamp duty concessions. Pandemic aftershocks. Victoria's strict COVID-era border closures meant fewer migrants and slower population growth. Low confidence, high rent. Investor confidence is down, but rental demand is through the roof. Vacancy rates are sitting at just 1%. It's created the paradox. The market is soft, but rents are up, and that presents a very unique opportunity. Step 2. Why is Melbourne undervalued right now? Let's break it down. 1. Declining property prices. Melbourne has dropped around 10% in value since early 2024. This creates a buyer's market, less competition, longer days on market, and more negotiation power. 2. Government policy shake-ups. Land tax changes. The threshold dropped from 300,000 to just 50,000. Stamp duty concessions removed. First home buyers are now paying tens of thousands more upfront. Rental reforms. Stricter laws have made life harder for landlords, which has pushed some investors away. 3. High rental demand. Despite the drop in prices, Melbourne's rental market is in crisis. At 1% vacancy rate, huge rental demand and rising rents. But because investor confidence is low, supply isn't keeping up. If you can navigate the landscape, the rental yield opportunities here are some of the best we've seen in years. Step 3. What are the best opportunities in 2025? These are the areas you'll want to keep an eye on. Middle ring suburbs. These are around 5 to 15 kilometres from the CBD. Think Brunswick, Preston, Mount Waverley, Essendon, Box Hill. Strong rental demand and limited supply, ripe for recovery. Infrastructure corridors. These are areas around Clayton, Burwood, anywhere along the suburban rail loop and metro tunnel expansion. These projects are game changers for capital growth. Gentrifying suburbs. Ringwood, Blackburn, Glen Waverley, all attractive to families and professionals. Affordable townhouses and low-rise apartments. Reservoir, Bentley, McKinnon, ideal for buyers priced out of houses. Step 4. Unique considerations in Victoria. Despite the drawbacks, there are still a few bonuses. First homeowner grant, $10,000 for metro, $20,000 for regional. Stamp duty concessions for purchases up to $750,000, though conditions vary depending on the contract date. Every state has its own quirks. In Victoria, there is a Section 32 statement. This must be given before contract signing. Cooling off period, 3 business days is normal. This is less than what you get in New South Wales or Queensland. Auction rules, no cooling off. All terms final on the day, no dummy bidding allowed. Victoria's population growth is roaring back. Post-COVID, migration has surged. Here's what you need to know. Net overseas migration, 82,000 to 84,000 people in 2023 to 2024, with 90% heading to Melbourne. 10-year forecast. Melbourne is set to grow by 1.5 million people by 2035. Fastest growing areas, Wyndham, Melton, Casey, Hume and Whittlesea. This isn't a short-term trend. Melbourne's population growth is back and set to shape housing demand for the next decade. Step 5. Where not to buy in Victoria right now. Even in a buyer's market, some areas carry more risk than others. Oversupplied outskirts. These include Melton South and Bacchus Marsh. Infrastructure is lagging. High vacancy rates. Watch out for areas with lots of vacant apartments. Rent returns may suffer. High crime locations. Broadmeadows, Frankston North. Buyer demand tends to be softer in those areas. Economically declining towns. More stall. Shrinking job markets mean fewer tenants. Natural disaster zones. Kinglake, Hillsville, Echuca and Mildura. Bushfire or flood-prone with higher insurance costs. Overheated markets, such as Torquay or Ocean Grove. Sharp price rises not backed by fundamentals. Melbourne's market is quietly brewing. It's undervalued, underinvested in, and full of untapped potential, but only if you know how to navigate the current conditions. If you found this video helpful, hit the like button and subscribe to the channel so you don't forget to catch our next video.